Hi everyone and welcome to our market analysis videos here at Zenfinex. My name is Connor Woods and I'm the Senior Market Analyst at the company, providing to you these daily videos on market commentary and also educational content. Now for today's video I'm going to be providing to you an update on my gold forecast for September, and to do this I'm going to analyse what has changed on the fundamentals side, and then I'm going to move on to the chart to see where price could finish for the rest of this month. Okay, so what's changed on the fundamentals side? I think it's really important that we look at Treasury yields first. Now we had a spike in US Treasury yields this week, and it's really kept gold below that 1800 level. And we really need Treasury yields to be falling off to make it more attractive to be buying the gold market as well. Now the reasons that the yields spike occurred was due to the strong Empire State survey that showed growth in manufacturing might not be as weak as initially anticipated. And this was really despite the Federal Reserve reporting on Wednesday, so yesterday, that the US industrial production grew by a slower 0.4% in August. So something to get your head around there. Quite confusing, those two narratives. But really, the direction of this market will massively depend on the September Federal Reserve policy meeting. That's on the 21st, 22nd of September. Now, gold loves globally easy monetary policies, and this could be about to moderate. So really we're waiting on clues as to when the Federal Reserve are going to actually begin their asset tapering. If it begins to taper earlier than expected, then honestly I can see gold falling even further. However, the weak jobs report that we had and the fact the Fed always keep their stance the same makes me think there may be no surprises, so we could see a move back above that 1800 level. Now let's talk about the US dollar, and this is one of really the main reasons gold will fall from an earlier tapering situation. Now gold moves inversely to the dollar, as we know, and it's thought we may see some more dollar strength throughout September, which is likely to keep putting pressure on gold. If we look at the latest CPR report, much softer than expected, yet the dollar's still ploughing on as well. And as I said, it's massively going to depend on the Federal Reserve reaction to that data that is due out in a couple of weeks. Now I have said this before, but I think the earlier tapering is being underestimated in the markets, but let's see what happens next week and I'll provide an update on that as well. Okay, so having a look at the chart now, and really this is so hard to predict at the moment because we can just see so much happening around this 1800 level. This 1800 level is absolutely critical. If we can't get a break above that, you can see, look, we threatened to break above and then we've ended up closing below and really just chopping our way above and below 1800, and I think this may be the case until the next week's Federal Reserve policy meeting. So let's go on the basis that potentially we have a bit of a surprise and they look to taper a bit earlier. Then I can really see, I'll just mark that for you, these lows coming into play. So anyone selling the market, if we do get a surprise from the Fed and we look to start tapering early, the dollar gets even stronger, and I can see this market being pressured all the way down to around the 1678, these swing low levels. I would be a buyer from here, and as you can see, many other people have jumped into the market as soon as that. A break below that would be unlikely, but if it does, then we're going to start to look towards silly numbers like 1650 and 1600, so let's not worry about that too much. If the more likely situation happens where the Federal Reserve, they don't really change their stance on the market and they say, look, we're going to be starting our asset tapering process in December as planned, then I can see gold benefiting from. Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenfinex.co.uk, you will see the offer in front of you straight away. And this is that you can trade Forex on a standard account with raw spread plus zero commission. And now Zenfinex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. From this, to be fair, I can see dollar weakness start to come back in to the market, and the reason for this is because it's basically them saying that we're going to keep this easy monetary policy in the market, and if we have more money flooding into the market, then we're going to see dollar underperform, and we're hopefully going to see gold start to rise as well. Now, where could gold rise to? Well, I noticed something not too long ago. We have this price imbalance here, which coincides with the fact that we have 3 touches on this market high. So we have liquidity Let's draw that again. So we have liquidity sitting just above these highs here. So anyone who's looking to sell the market, any retail trader who's selling the market may have put their stop losses above these highs here, or we have this triple top, this triple touch, which is a logical thing to do, but obviously the big players know this. So I could see a run on liquidity, which coincides with the fact that the market is actually imbalanced here. So what we might see, I mean, it looks like it's just about to fall off as I'm recording this video. So, but I'm talking about a monthly forecast. We could get a situation where price grabs liquidity and runs through our fair value gap, which I forgot to mark. Apologies. FVG fair value gap, just a show of where the market is inefficient. You can see this gap here, where we had an unequal amount of buyers and sellers. And depending really on how far we go through there, if the market wants to go lower, we may get this liquidity grab already, and then that could be a sign that the price wants to dump. Or we might run straight through that, and we might go and test the highs up at around 1914, which seems a long way away at the moment. But these are the kind of two extremes that I'm seeing. I'm seeing up at 1917, I'm seeing down at 1670 as the real large range of the market. But if anyone's looking to get in on a buying opportunity, potentially if the market fell and filled in some more of this inefficiency that I can see in here, it's a bit bigger than that, then we may get a situation where we can buy the market from this inefficiency filling, and then we can look to target, I'd be honest, I'd look to target, oh, I've marked that completely wrong, up at around 1840 is where I realistically see this market maybe finishing the end of September up at around 1840. Again, it's going to massively depend on how the Federal Reserve reacts, as I've said constantly, but it really is important to keep an eye on that. So let's have a look at some lower time frame stuff. There isn't really much to talk about here. We have several wicks where the market's looked to gone lower and it's bounced back up. But to be honest with you, I see a situation now where we're going to be in this limbo, we're going to be in this range, and this chop around this 1800 level until this Federal Reserve meeting that we have next week, until this policy decision. So that's it really for gold, guys. Again, it's a market where we're going to have to be a little bit more patient. We know that volatility can flood into gold just like that. But at the moment, we're seeing this chop around the 1800 level. We've got some fair value gaps above and below. I think I see the market going to around 1840 by the end of the month. But we get a surprise from the Federal Reserve and they start to ease off their monetary policy. Then again, we could start to see these lows coming into play here. So as always, guys, make sure you're liked and subscribed to this channel. And also make sure you've got your notifications turned on so you'll never miss a video from us. This is our final video of the week, but we are looking to put more videos on for you. I think we're going to up it to around 4 videos a week. And we're going to start to get crypto involved as well, so make sure you do not miss out on that one. Other than that, I hope everyone has a great weekend, a great rest of the trading week, and I'll catch you all for the next video.